Did you catch that hundreds of thousands of people left Florida in 2023? That's the biggest population drop the state has seen in decades. For a place known for sunshine and palm trees, it's a pretty shocking shift, but that's not all. Home values are dropping fast. Some cities are seeing price cuts of $100,000 or more. Meanwhile, unsold homes are stacking up in places like Green Acres and Bradenton, and in some areas, foreclosures have jumped by over 200%. This isn't just a small correction, it's starting to look like a full-blown crisis. So, what's really driving people out of paradise? 1. The population exodus. Why 500,000 people left Florida in 2023? What happens when paradise becomes too expensive? Florida's long-standing reputation as the go-to destination for sun, relaxation, and opportunity took a hit in 2023 when more than 500,000 residents packed up and left. This mass departure isn't just a blip, it's the largest population decline the state has seen in decades, and it's sending shockwaves through every corner of the housing market. So why are so many people suddenly saying goodbye to the Sunshine State? The main reason comes down to the cost of living, and at the center of it all is the insurance crisis. For years, Florida's population ballooned as people escaped cold winters and high taxes elsewhere. But now, the financial reality is forcing people out just as quickly as they arrived. In Cape Coral, for example, average annual insurance premiums have soared up to $10,000, and for some homeowners, that bill is actually higher than their monthly mortgage. It's not just a Cape Coral problem either. In Green Acres, the average homeowner is shelling out around $9,400 a year for insurance on a $350,000 house, and that's before you even factor in the tens of thousands more you might need for wind mitigation upgrades just to qualify for coverage. None of this is happening in a vacuum. Florida's geography, miles of coastline and low-lying land, makes it a magnet for hurricanes, and that risk is getting worse. After Hurricane Ian alone, which racked up over $112 billion in damages statewide, several major insurers decided to pull out of Florida entirely. The few that stayed behind jacked up premiums to cover their risks, leaving homeowners with little choice but to pay up or get out. For a lot of families, paying thousands every year for insurance that still might not cover everything is a deal breaker. But insurance is just the tip of the iceberg. The broader cost of living has exploded, hitting everything from groceries to gas to utilities. That's pushed a lot of middle-class families to the brink. Take Deltona, which was once a haven for people priced out of Orlando. Now, home prices there have dropped around 18%, and nearly 1 in 3 homeowners owe more on their mortgage than their house is worth. When your equity disappears and your bills keep rising, moving out starts to look like the only way to get your finances back on track. Natural disasters aren't helping either. The constant threat of hurricanes, flooding, and storm surges has made homeownership feel more like a gamble than an investment. After the devastation from Hurricane Ian, insurers bailed, premiums skyrocketed, and the whole system started to feel unstable. People in Tampa Bay and along the Gulf Coast are tired of rebuilding year after year, especially when every storm season brings new uncertainty and extra costs. All of this has created a domino effect in the housing market. With so many people leaving, the demand for homes is dropping fast. Fewer buyers means more homes sitting empty. In Port Charlotte, for example, the vacancy rate is a staggering 25%, 1 in every 4 homes is unsold. And it's not just fancy beachfront properties that are being left behind. Even regular single-family homes are sitting on the market for months, with sellers slashing prices by $100,000 or more just to get some interest. The days when homes sparked bidding wars and sold in a weekend are long gone, but here's the catch: even with prices falling, homes aren't suddenly a bargain for everyone. High taxes, those relentless insurance premiums, and hefty HOA fees are still eating up budgets. For a lot of families, the math just doesn't work anymore. The result is a feedback loop. People can't afford to stay, so they leave, and as more people leave, the market weakens even more. This isn't just a temporary setback. The loss of hundreds of thousands of residents is leaving entire communities in limbo. Places like Cape Coral and Green Acres are dotted with empty homes, and the sense of uncertainty is growing. The population exodus isn't just a headline, it's the spark that's setting off a much bigger crisis in Florida's real estate market. With so many residents walking away, what happens to the homes they leave behind? 2. The Great Slowdown, homes sitting on the market for months. Florida's housing market slowdown is hard to miss. In places like Green Acres, homes now sit on the market for an average of 63 to 70 days. Bradenton tells a similar story, with average days on market at 68. The days when sellers could expect a bidding war after a weekend open house are gone. Today, offers are rare, and homes slip into price cuts of $45,000 on average just to draw attention. You'll see entire neighborhoods dotted with for sale signs that don't budge for months, leaving both sellers and buyers uneasy about what comes next. Overbuilding is a big part of the problem, especially in cities like Northport. Builders raced to meet what seemed like endless demand, but now new subdivisions average over 90 days on the market. There's a 62% glut of distressed listings in Northport, and entire neighborhoods are left half-finished or empty. The supply of homes has completely outpaced the number of interested buyers, turning what was once a hotbed of new construction into a cautionary tale. Port Charlotte is in the same boat, with homes lingering unsold for more than 90 days. 1 in 4 homes there sits vacant, and builders have already canceled $280 million in projects because the waiting game is crushing both sellers and developers. Miami and Sarasota aren't immune either. Miami's active listings jumped 51% year-over-year, and pending sales dropped by 15%. The average home now takes 41 days to sell, more than double what it was 2 years ago. About 35% of Miami homes have seen price cuts, with some luxury properties dropping by $100,000 or more. In Sarasota, active inventory is up 46% from last year, and homes are sitting for an average of 39 days, compared to just 15 at the peak. Nearly 1 in 3 listings in Sarasota has had to slash prices, sometimes by $30,000 to $75,000, especially in mid-tier neighborhoods. The slowdown isn't just about overbuilding or too many listings. Inflated housing costs are pushing buyers out of the market. Prices soared so high during the boom that many families and individuals simply can't keep up, especially with rising insurance premiums and property taxes. In Green Acres, for example, homeowners are juggling insurance costs close to $9,400 a year on a $350,000 house, and that's not even counting other expenses. Unsurprisingly, buyer interest in these higher-cost areas has fizzled, leaving sellers with few options but to cut prices or wait even longer. In Winter Haven, the market correction is especially clear. 72% of homes are now selling below their original asking price. Sellers are being forced to adjust their expectations, and many are watching their home values drop by tens of thousands just to get any offers at all. It's the same story in mid-sized markets all across Florida: more inventory, fewer buyers, and sellers chasing a shrinking pool of demand. Developers are starting to feel the squeeze, too. Holding onto unsold homes means more money sunk into property taxes, maintenance, and financing. In overbuilt areas like Northport, the burden of carrying so much unsold inventory has already slowed or even halted some construction projects. Neighborhoods that were supposed to be bustling are now patchworks of empty lots and half-built homes. In Port Charlotte, the impact is clear. Entire blocks have 1 in 4 homes sitting vacant, and the ripple effect is hitting local businesses and community services as well. The result is a downward spiral. When homes sit for 90 days or more, sellers get desperate, price cuts follow, and equity evaporates. Buyers, seeing the trend, hold off in hopes of even better deals, which only makes things worse for sellers. Properties that seemed like great investments during the boom are now leaving their owners underwater, owing more than their homes are worth. When homes linger on the market and values keep sliding, the next step is almost inevitable. 3. Distress signals: the rise of foreclosures and desperate sales. Foreclosure signs are becoming the new front yard decor in Florida. In Palm Bay, foreclosure filings have jumped 45%, a clear signal that financial strain is hitting homeowners hard. Over in Winter Haven, the problem is even more dramatic. Foreclosures there have surged by 238%. That's not just a blip, it's a warning siren for anyone watching the market. These aren't just isolated incidents, either. In Northport, a staggering 62% of recent home sales are now classified as distressed, meaning foreclosures, short sales, or desperate price drops. It's not just a few unlucky families, it's entire neighborhoods feeling the squeeze. What's behind all this distress? It's a cocktail of rising costs and mounting uncertainty. Insurance premiums have shot up so much that, in some cases, they're higher than the mortgage itself. Then you've got HOA fees piling on, with some neighborhoods hitting residents with special assessments that average $155,000 per unit, like what happened in certain Winter Haven communities. Imagine getting a bill like that on top of everything else. It's no wonder so many homeowners are finding themselves unable to keep up. The impact of all these foreclosures and desperate sales goes way beyond the families losing their homes. Each distressed sale drags down property values for everyone else on the block. Foreclosures push values down, bargain hunters circle, and soon entire blocks mirror ghost towns in progress, like parts of Northport where empty shells outnumber occupied homes. When buyers see street after street of for sale and bank-owned signs, confidence evaporates. Sellers slash prices, hoping to attract any interest, but the pool of buyers is shrinking fast. The few who do show up are often just looking to score a deal on someone else's misfortune. You can see the effects in places like Port Charlotte, too. Homes there are getting price cuts so deep that some sellers are knocking six figures off their original asking prices just to get a nibble. Vacancy rates have hit 25%, 1 in every 4 homes is sitting empty. That's not just a number, it's a sign that entire communities are stuck in limbo. Investors who bought during the boom are now underwater, and the urgency to sell is only making prices fall faster. In Winter Haven, the numbers tell a tough story. With foreclosures up 238% and more than a quarter of those homes bought within the last 3 years, it's clear that even recent buyers are in trouble. Many of these folks jumped in during the market's peak, only to watch their equity vanish as prices dropped and costs soared. Some HOA-managed properties there have hit owners with special assessments averaging $155,000 per unit, piling on even more financial pain. When that kind of expense shows up, it's game over for a lot of homeowners. The types of distressed sales are changing, too. Short sales, where owners try to sell for less than they owe, are popping up more often. Bank-owned properties are flooding the listings, with banks eager to offload them quickly, even if it means taking a loss. The more these sales appear, the lower prices go for everyone else. It's a cycle that feeds on itself. More foreclosures mean more supply, which drives prices down, which leads to even more foreclosures. Even homeowners who are still making their payments are seeing their equity slip away, making it harder to refinance or sell if they need to. The physical signs of this crisis are everywhere. In Northport, empty lots and half-finished developments have become the new normal. Port Charlotte's vacant homes and abandoned construction projects give entire neighborhoods a frozen, incomplete look. Local businesses feel the pinch, too, as fewer residents mean fewer customers. Even people who aren't directly tied to real estate are feeling the effects as communities shrink and services dry up. So with foreclosures climbing, how high have living costs climbed? Let's look at insurance and HOA fees next. 4. The cost of living crisis, insurance, HOA fees, and more. Homeownership in Florida has turned into a financial balancing act, with insurance premiums and HOA fees at the center of the struggle. In Green Acres, for example, the average homeowner with a $350,000 house faces an annual insurance bill of about $9,400. That's before you even consider the $20,000 to $30,000 many are expected to shell out for wind mitigation upgrades just to keep coverage. It's a situation that's pushing a lot of families to the edge. And this isn't just a quirk of one city, these kinds of costs are popping up all over the state. Palm Bay is a good example of how quickly things can spiral. HOA fees there have jumped up to $850 a month, a 185% increase since 2022. This isn't just hitting folks in luxury developments, middle-class families are feeling it, too. When your monthly HOA fee suddenly more than doubles, it's a shock to the system. For some, it's the last straw that sends them looking for the exit. And for potential buyers, these high fees are a red flag, making them think twice before making an offer. So, what's behind these surging insurance rates and HOA fees? Florida's natural risks, hurricanes, rising sea levels, and shifting flood maps make it one of the most expensive places in the country to insure a home. In Fort Myers, the impact of Hurricane Ian back in 2022 is still being felt. Insurance premiums there have jumped from about $2,100 in 2020 to around $7,300 a year today. If you live in a flood zone, it's not unusual to see annual costs climb past $10,000. HOA fees are also up, with many gated communities now charging between $600 and $900 a month. These increases are being driven by new disaster reserve funds, stricter building codes, and the need for flood protection upgrades. Miami is another city where the numbers are hard to ignore. The average homeowner's insurance premium has hit $10,200 a year, which is nearly 5 times the national average. Add in flood insurance, another $2,000 to $4,000 annually if you're in a flood zone, and the costs become overwhelming. Condo owners get hit from both sides, too. Monthly HOA fees in many high-rises now range from $800 to $1,400. Just keeping up with these bills is a challenge for a lot of people, and it's forcing some to reconsider whether staying in Miami makes sense. Port Charlotte has its own set of problems. Rising insurance premiums and the need for expensive wind mitigation upgrades have led to the cancellation of $280 million in construction projects. Developers are pulling back, and current homeowners are stuck with growing expenses. When the cost of just keeping your home insured goes up by thousands, it's no surprise that more people are listing their properties and leaving the area. Northport and Tampa are feeling the squeeze as well. In Northport, the average homeowner is now paying about $6,800 a year for insurance, up from just $2,000 a few years ago. If your house is near a canal or in a flood-prone spot, you can tack on another $2,000 to $3,000 for flood insurance. HOA fees in planned communities have climbed to $200 to $450 a month, a 35% jump since 2021. Tampa's numbers are even higher. Average insurance premiums are now $8,200 a year, and if you own an older or coastal property, that number can shoot past $12,000. HOA fees in neighborhoods like Westchase have doubled, with some residents now paying $700 a month. Winter Haven stands out for just how extreme things have gotten. Insurance premiums have tripled since 2022, and in some cases, homeowners are paying more for insurance than they do in property taxes. One condo complex there hit residents with a special assessment averaging $155,000 per unit. For most people, that's simply not manageable. These costs don't just test budgets, they push homeowners to sell or default. It's hard to believe that just a few years ago, Florida was considered a much more affordable alternative to big cities in the Northeast or on the West Coast. Now, all those rising costs are eating away at the very appeal that brought so many people here in the first place. Even as home prices drop, the reality is that high insurance, HOA fees, and surprise assessments keep ownership out of reach for many or force people to leave. As more families and retirees decide they can't make the numbers work, inventory piles up and the market gets even shakier. Florida's cost of living crisis isn't just a story about numbers, it's a warning sign for the entire housing market. The pressure is building, and a lot of people are wondering if this is a repeat of something we've seen before, or if the fallout could be even bigger this time. 5. Is this Florida's 2008 moment? The bigger picture. Let's talk about whether Florida is heading for a repeat of 2008, or if this is something even bigger. The warning signs are everywhere. Inventory has spiked, prices are dropping, and distressed sales are on the rise. Tampa, for example, has seen inventory jump by more than 35% in just a year, and Jacksonville's net inbound migration is down 28%. These are the same red flags that showed up before the last big crash, and they're making a lot of people uneasy. Back in 2008, the main culprit was bad lending and unchecked speculation. Neighborhoods went up overnight, only to sit half-empty when buyers dried up. Fast forward to now, and you'll see a similar story in places like Wesley Chapel. Developers rushed in, But now homes priced down 22% are languishing on the market, and 65% of pending sales have collapsed. That's not just a soft patch, it's a sign that the market is struggling to find its footing. In Port Charlotte, 1 in 4 homes sits vacant, and $280 million in planned construction has been canceled. Overbuilding and investor speculation have left entire areas exposed, just like before. But this time, there's a new twist: climate risk and insurance chaos are making things even more unstable. After Hurricane Ian caused $112 billion in damages, insurers started fleeing the state. Premiums doubled or even tripled in many cities, and some homeowners now pay more for insurance than their mortgage. It's not just a hassle, it's driving people out and scaring off new buyers. Unlike 2008, when the problems were mostly about money and lending, today's crisis is being fueled by weather disasters and a shrinking pool of people willing to take on the risk. Speculative buying during the pandemic added even more fuel to the fire. Investors snapped up properties in Miami and Tampa, betting on endless growth. Now, the tables have turned. In Miami, property prices have stalled and unsold condos are piling up. The same thing happened in Port Charlotte, where heavy investor interest fizzled out as soon as the numbers stopped making sense. Overbuilt neighborhoods and canceled projects are now a common sight. Experts don't all agree on what happens next. Some see a natural correction, but with rising costs and shrinking population, others warn of a long-term collapse. The reality is, Florida's housing market is getting squeezed from every direction. Insurance and HOA fees keep climbing. Fewer people are moving in. Vacancies are up, prices are down, and foreclosures are stacking up in places like Palm Bay, where filings have jumped 45%. The market isn't just cooling, it's showing all the symptoms of a system under serious stress. This isn't a carbon copy of 2008. That crash was mostly about bad loans and banks that couldn't keep up. Now, the external pressures are just as big a threat. Climate change isn't going away, and neither are the insurance headaches. The population decline may not reverse anytime soon either. These are long-term problems that could change Florida's real estate landscape for years to come. If you're thinking about buying or investing, the risks are real. Sure, prices are dropping, but the costs of ownership keep rising. You have to ask yourself if the math really works, even with a lower sticker price. For people who bought at the peak, the reality of falling values and rising expenses is a tough pill to swallow. Whether you call it a correction or a crash, if you're eyeing Florida real estate, here's what you need to weigh before risking a move. Florida's housing market faces a tough road ahead. Years of rapid growth have collided with soaring insurance premiums, rising HOA fees, and a flood of unsold homes. Buyers and sellers are stuck in a market that's no longer predictable. If you're considering a move, remember, watch inventory trends, factor in insurance costs, and consult local experts. Always run the numbers with a professional, because stakes here are high. Which Florida city would you avoid based on these warning signs? Let me know below. Will Florida weather this storm, or has its housing dream already cracked?